Guys, it's November 27th, and we're going to go over my take on Planet 13 and the earnings they reported on Tuesday. Okay, yesterday, of course, was a crazy day, but today we're going to do something a little more chill and report and give our thoughts, our take on the earnings from Planet 13. Of course, this is a stock that we own. We've owned it for a while. We own about 1,500 shares at $2.60 cost basis. Very happy with this business at the moment. But let's go over this quarter because that's an important thing, okay? Before we get started, please hit that like button, hit subscribe. Hope that I'm giving you value. That's the goal here. Just give you value and have fun while we're doing this, all right? So let's get to it. So for those of you that don't know, I'll give you guys a quick rundown. Planet 13 is a cannabis superstore chain. Now it's a chain as of this quarter. Their main store is in Las Vegas, right behind the Fashion Show Mall, close to Wynn Resorts here in Las Vegas. Their newest store, which opened in Orange County, their Orange County Superstore, just opened on July 1st. And they also have a growth path to Chicago, in which they're actually looking for stores at the moment, in Florida for some neighborhood stores, and maybe 2 to 3 superstores in the next 2 to 3 years. Okay, they're very well funded. They have money to do this stuff and to grow the business. Planet 13 Las Vegas has seen increased traffic, increased sales, so doing pretty good there. Okay, but let's go over the actual nitty gritty of this report, starting with the earnings numbers. So here we're going to start with EPS, revenue, and guidance. So pretty simple, not as complicated as other earnings reports that I've had. 4 cents loss versus 1 cent expected. And this expectation is very loose. I take it with a grain of salt because it's not an expectation based on the street. Wall Street's not giving us this number. It's actually being done by these kind of investment banks, kind of lower end investment banks. So I take this with a grain of salt. Revenue $33 million versus $37 million expected. Same thing. The expectation is very loose. But $33 million is a good year-over-year growth on revenue. With financial guidance, there's no guidance as usual, but the growth plan is in full effect. Here you'll see the metrics. So not a lot to kind of dissect here on the earnings numbers themselves. Now let's go over the actual financial results that are reported on their investor relations site on their earnings report. So we start here with Q3 numbers, revenue numbers, up 45% compared to Q3 of 2020. So I don't think this 45% number is incredibly strong because Q3 2020 was a very challenging number. When we talk about, for example, when we talked about rocket companies, this is the opposite. Planet 13 had a real hard time in Q3 2020 on making money and keeping themselves afloat. Rocket companies had the opposite. They were doing excellent. Now they're being punished because they're not doing as excellent because their year-over-year comparisons are tough. In the case of Planet 13, their year-over-year comparison should be very easy to beat. Very, very easy. And this 45% number, I think, should be closer to 60, 65%. So for me, my expectations, this is below my expectations of their year-over-year growth rate when it comes to revenue. Okay, when it comes to EBITDA, their earnings numbers, EBITDA, of course, earnings before interest, tax, depreciation, amortization, $3.5 million. Okay, so these earnings are kind of like fake earnings, or that's what I call them, because these earnings are without having to pay those items: interest, tax, depreciation, and amortization. They're actually not profitable at the moment when it comes to net income. So this is an unprofitable business as it stands right now. But there's reasons for that. Let's go over those reasons. So we see the CEO down here say this was a massive quarter towards securing the future growth of Planet 13. And I think this is key because they are spending a lot of money, what's called capital expenditures. Short for that is CapEx. When you see that kind of lingo, CapEx, it means capital expenditures. So they're spending a lot of money in securing licenses, their building of their Planet 13 Superstore in Orange County, securing licenses in Florida. They're spending a lot of money doing that, also doubling their sales floor in the Las Vegas store, along with design of their consumption lounge and a cannabis museum. So they're spending a lot of money in expansion right now. So this is not a company focused on making shareholders profit. It's focused on growth, massive growth. And I think they're doing a good job at that. So let's kind of dissect that a little bit more. So we move on here to the financial highlights, operating results. I don't want to go over those at the moment. Balance sheet, we'll go over that in a little bit, but I want to go over these highlights and recent developments because I think that tells the story here of what's going on. So July 1st, of course, they opened their Orange County Superstore. And then here they're saying, hey, we owned the subsidiary that we own in Chicago secured a dispensary license. And that is huge because they are currently looking for space and real estate to expand there. They also announced a definite agreement to acquire a Florida cannabis license. That cost them a pretty penny, man. It cost them, I think it was like $100 million, something close to that. If I'm not mistaken, I think they spent about $50 million right now on that licensing in Florida. Okay, and then they doubled their dispensary floor space at the Las Vegas Superstore, and they announced the close of the acquisition of the license in Florida. So good developments towards the growth of the company. That's something we definitely want to see. That's the reason we own this stock. And of course, we'll go over here, balance sheet, cash on hand, $73 million, totally fine. Assets, $220 million compared to $150 million the same time last year. Of course, because now they have the licenses that are assets. Then we have the Orange County Superstore. That's an asset as well. So this is going to be an asset-heavy business, okay? And then the liabilities, $35 million as compared to $29 million. So slightly more debt, but still A-grade balance sheet because they have twice the amount of cash as they do debt. That is an A-grade balance sheet in my book. And then to close it out here with a report, we're going to financial highlights. Okay, revenue is $33 million as compared to 28, increase of 45%. We've been over that. Gross profit before biological adjustments, $17.6 million or 53.5% as compared to the same time last year where they only made $13 million, but it was a higher gross profit margin. Okay, so this goes to the cost of doing business and management essentially. So it's costing them more to do business. This is probably due to the California Superstore because the California Superstore is getting some headwinds with construction. We'll go over that and a couple different factors there, okay? But of course, net loss before taxes, $4.6 million. So this is our net loss versus a profit last year of $3.4 million. I'm not going to hold them over the coals for a loss of $4.6 million. The reason why is because, like I said, we're not looking to make profit now as shareholders. We're looking for Q3, Q4, at the earliest, 2023. At the earliest. We need to let this company grow. So I'm totally okay with the amount of expenditures and for them to post a slight loss this quarter. So totally fine with that, okay? And then adjust the EBITDA, $3.6 million compared to $6.4 million the same time last year. So those are the financials, the hard financials there. Nothing too crazy, nothing to jump up about. It's just essentially this is where they should be based on the amount of capital expenditures they're having and their expansion plans. Not mad about this. The only thing that I would be critique for me would be the 45% revenue growth. I think the revenue growth should have been stronger than this. Not that it's not strong, but it should have been stronger than this. Now here, moving on to this slide that I made for you guys, and this is kind of help me understand and help you guys understand the dynamics between the earnings report and the actual conference call, because there's a lot of the conference call. If you read the transcript, if you want the transcript, I can send you the transcript, no problem. You can probably get it online very easily. But essentially, this business is divided right now into three parts. Okay, we have the Las Vegas Superstore, we have the Orange County Superstore, and their future expansion plans for Chicago and Florida. So we start with the Las Vegas store. That's their principal revenue driver. This is where most of the sales are coming from. Here we're seeing that the increase in traffic, same store foot traffic, has been increasing steadily every month, which is a very, very, very positive thing. And I think with the doubling of the expansion of the floor space, we're going to see these numbers probably even go higher. And the efficiency of getting these people in and out of the store is going to be higher and higher as time moves on. Okay, so to get it back on track, okay, so they finished their max expansion of the retail floor and improvements. Consumption lounge, okay, this is something that's pretty important. The consumption lounge is currently in the design stage, and it's maybe slotted to be finished somewhere in Q4 2022, maybe a little bit later. So that is my expectation for the finishing of the consumption lounge. It's probably going to be the first consumption lounge in Nevada since the Nevada legislature just passed a statute allowing for consumption lounges in these spaces, because it doesn't make sense for somebody to go buy their cannabis and then have to go to a hotel room where you can't smoke it or somewhere else that you can't smoke it. It's pretty much illegal to smoke it anywhere, after you buy it. So these things make sense. Also, they're going to have some backing there from some movie stars like Cheech and Chong and Mike Tyson, Lil Wayne in these consumption lounges. So I think that's very smart. Then we have a slowdown here in Q3 due to seasonality and some Rona trends. Okay, so when it comes to seasonality, everybody who's from Las Vegas knows that November, December, things start to slow down until New Year's hits, where everything just picks back up tremendously. Then it slows down for a little bit in January, and then it picks back off for the rest of the year. So seasonality is important in Las Vegas because every tourist destination has seasonality, and we have to deal with it. But of course, we're doing it on a year-over-year basis. I think it's strong, but it could be stronger based on the revenue growth, of course. Okay, now we're still holding about 10%, a little bit over actually 10% market share of the Nevada cannabis market. Not too concerned with that. I think that number will get stronger. The thing is, competition is real, but at the same time, the expansion into Florida and Chicago should help us get more market share, not only in Nevada, but throughout the U.S. That's what we're looking for. We're not looking for Nevada market share. We're looking for overall national market share. Okay, then we have a strong growth numbers from the Trendy brand, which has grown 110% year over year. That's positive. Improving sales with our medicine dispensary. We've talked about medicine dispensaries before. These are kind of like your neighborhood stores that they're planning for the Florida side. Okay, we have that slight decrease in gross margins. We just talked about that. And the traffic space. And of course, the possible cannabis museum. This is looking more possible day after day. So very, very, very positive things happening in Las Vegas. All right. Now, let's move on to the Orange County store. So, of course, we had Orange County open on June 24th. Sales have been bad. Okay. Sales have not been good. So far, the opening in Orange County has been disappointing. No other way to say it, guys. So, there's absence of overseas tourism. There's untimely freeway construction. I mean, guys, freeway construction. I mean, here, if you live here in Vegas or in California, you know that there's freeway construction all the time. So this is something they should have known. And it's looking that it's going to affect them from 10 to 14 months. But at the end of the day, they don't know because it's depending on what the city or what the state is telling them. So this is a question mark for now. How much is this going to affect the business there? Okay, so the store is still relatively new, and the marketing strategies still need to play out there. So we need to give that time, but hopefully it starts picking up. But so far, the Orange County store has been disappointing, to say the least. It only generated $2.4 million in sales, while the Nevada store generated $29-30 million in sales. Not good. Okay, not good on the California side. Now, when it comes to the Chicago expansion, so they're already looking actively for real estate and have a team out there to look for a location. They have several promising locations, but the license is scheduled to be finished, and everything's scheduled to be finished in the first half of next year and ready to start digging and ready to start building there. Okay, now when it comes to the Florida expansion, this is going to start with a neighborhood store kind of network, kind of like the medicine brand here in Las Vegas. Okay, so they're also looking to keep expansion in Florida because it's such a rich market. 2 to 3 superstores in Florida alone. So this is great news. And this won't be the end of the expansion plan by no means. This is essentially the 5-year plan playing out, in which they want 5 to 8 superstores in tier 1 markets. And I think they're very much on pace or ahead of that pace to get that done in 5 years. All right. Okay, guys, so that's it at the end of the day for Planet 13. Nothing too complicated there, but it's a stock that I really like. Remember, this is not a stock that you can buy on Robinhood. Unfortunately, you need the more serious type of stock exchanges, stock brokers rather, to buy Planet 13. Symbol PLNHF on the over-the-counter stock exchange. One more thing before I leave. So I had to pull here real quick the conference call transcript because I thought this was extremely important for us shareholders. Okay, so the company's in the process of transitioning to becoming a U.S. domestic corporation and registering with the SEC. They're not registered with the SEC. This involves the company switching to U.S. GAAP effective January 1st, 2022. U.S. GAAP is generally accepted accounting practices. This is what companies do before they're going to list in the major markets, when they're going to uplist. So they're going from the OTC to the New York Stock Exchange. So they're saying, hey, we're doing all that compliance and preparing Form 10 registration statement. So We incurred about $400,000 in fees as the result of these initiatives, okay? It sets the company up through potential uplisting to a recognized U.S. exchange. So we're talking the New York Stock Exchange, possibly the NASDAQ. So when that happens, we're going to get opening for all kinds of new investors to come in and drive up share value, guys. So this is a very, very positive thing. I think it's the most positive thing I saw in the entire report and got me the most excited about the company. So at the end of the day, that's going to be it for Planet 13. I hope you guys enjoy this. Whatever value you get. Any questions, let me know. Join us in the Stock Glider Discord to talk about this. Shoot me with any questions on Instagram, here on YouTube, guys. Peace out.